NGT's been in business for about 5 years.
Welcome to the Full Stack Network Associate Bootcamp.
We've grown the business and we've grown the learning management system where it can serve millions of users. But our challenge here is getting those users.
You guys all know our mission is what? We want to change 1 million lives by 2030. So we've got some work to do. This is the time where all of us need to get really synced up.
We've called this leadership summit to really plan our go-to-market for 2022. Because our goal is to change 1 million lives. But how do we get there? How do we get millions of users to hear about NGT Academy and our programs?
My man,
Hey,
Josh.
what's going on?
What's going on?
Welcome to NGT Academy.
Wow, I'm so excited.
We've brought in Josh because he has such creative ideas on how you can really convert the traffic at the top of your funnels.
So what's going on, guys? This is beautiful.
I want to spend half a day, deep dive, and really try to figure out how do we get to 10,000? How do we get to 100,000 students?
And Josh isn't just about marketing. He will look at different angles of the business and come up with some really clever ideas.
A lot of people from an outside perspective think, oh, is it another coding bootcamp? If you look at our competition, they are going after the 30 to 50-year-old.
Yeah.
Now, we created a program 4 months versus 4 years without the student debt. And I love to talk about the student debt because that's the big problem. And we want to go after even the younger demographics before they get into student debt.
Well, wait a second. If you would consider colleges, traditional colleges, universities as competition?
Yes.
Well, where are they getting students from?
High schools. High schools or veterans, military people that are active duty.
Let's stick to high schools for a second.
Yep.
Have you guys done anything with high schools yet? Anything with success? Any thoughts yet?
Nothing significant.
They would enroll or find us.
If you catch them early enough, you're preventing the debt load system on America on its own.
Trillion accumulated in just the past decade.
That's huge. I mean, that's a trillion dollar problem. But in order to reach a younger demographic or potentially a different demographic, you have to tweak your approach, right? And if you're targeting high school students, where do high school students go? High schools? Who talks to the students? The counselors.
My perception would be almost that there's still needs a paradigm shift. Like parents just saying, no, you have no choice. I'm sending you to college. If your daughter said, Dad, I'm not going to college.
I will freak.
See? So if your daughter now educates you and says, Dad, there's a different alternative. It's in downtown Phoenix.
Right.
And guess what? You can save your money, Dad.
Yep.
What would you say?
I would say, I want to learn more.
It's huge.
And I think the way we test this is, I think most parents like, oh, I don't want to send my kid, instead of going to a physical space, just be stuck at home. And the fact that we're here and have a campus, and have all these facilities, eating, sleeping, training.
What colleges do? Come parents, check out the dorm, look at the goat yoga outside.
Like a dog and pony show for parents.
Just like a college would say,
tours,
hey,
man.
come
Weekly
visit
tours.
campus.
You have it here. You've already invested in it.
That's right.
And I like that because it justifies the capital expenditures required to scale the physical footprint of the business. It builds upon itself. I like that.
That is powerful.
This is exactly what we needed, a clear path forward.
Well, listen, guys, this was amazing. This has got me jazzed that, I get to be at least a fly on the wall with what you guys are doing.
We can change lives and change education.
Given that KPMG is one of the big four, I want to learn what are the different options for us going to IPO, what are the path and what are the pros and cons of those paths.
How much are you looking to raise?
So we're looking to raise 72 million in total, 36 million on a 200 million pre-money valuation, and then with warrants for the next 36 million.
How are you thinking about what drives that valuation? Is it enrolled students today?
Since our Reg D Series A, we were valued at 50 million post-valuation. Okay. So that was 2.5 years ago, based on 3.2 top line, but probably 2.1 million. So I think there was like a 22, 24x multiple. But that's, that was in Silicon Valley. And sometimes the valuation is not just based on revenue, right? It's based on team, it's based on the founder's background, domain expertise, a bunch of things like that, IP, LMS.
Ultimately, you will be reporting on those metrics, and people are going to want to see trends and developments and progress along all those lines, and positioning the business really as a technology company as opposed to just a traditional for-profit education company. From a market perspective, there's a different perception of the multiples associated associated with those businesses?
At the core, I would say we are a technology company that has taken next generation training, and now we want to deploy it and serve it to the masses. If we are going to IPO successfully, we are looking at comps around 6 to 7x as a traditional education company. Roddy giving us feedback around, you guys need to position yourself as a tech company more if you're going to demand something much higher. That was very insightful.
What is your cost of the education, though, for the student?
Typically, it could cost the company around anywhere from $5,000 to upwards to maybe $8,000. Slightly higher if they're going to come to our campus location. So that's kind of our cost baked in, but that's including customer acquisition costs. That's the instructor cost. That's the infrastructure, the equipment. We put a lot into the program.
And so you get payback out of the students' earnings and income.
Yeah, so we started the ISA program in Q1 of 2020. So we've been running that for about 18 months.
It's unique, but it's not unheard of what NGT is doing. But, you know, there's a layer of complexity. It's not as straightforward as a student coming in the door, paying tuition, et cetera.
The way ISA works is if the student's financeable, we've de-risked that. We have a great partner that will advance us a percentage of the tuition cost up front and another advance when the student completes our program. Right now, we hope to optimize it to at least 80% of our students to be financeable. Then the remainder, 20%, we finance in-house. That means we'll take the risk and we'll take 10% of their income once they get a job.
Essentially, you're securitized.
Yes.
With the income sharing agreements, that's one aspect. But on top of that, what they're doing then is factoring or securitizing that stream of payments through a third party. And that's not an unusual concept in terms of securitization. Any future cash flow stream, you can sell that and receive upfront payment. But, you know, that's got to be handled, I think, very carefully.
What are some key milestones that you believe that we should hit to be able to IPO in 18 months?
For me, it all comes back to kind of business fundamentals. I think whatever path you choose, at the end of the day, you're going to be assessed off of your KPIs, of your business metrics. Overall enrollment, job placement, customer acquisition costs. These all need to be trending in the right direction because you're going to have to continue to deliver value for your shareholders long term.
Now, in terms of going, looking forward, there's a lot of hype around SPACs. How should we look at that as another vehicle?
SPACs are hot right now, and with a SPAC, companies can negotiate upfront with the sponsor and have a little bit more visibility into valuation. Versus an IPO, you don't really know until you price. And so in this volatile market, SPACs have become more attractive. So certainly technology industry has been hot from a SPAC perspective, and so you're well placed. Often you're bringing in sophisticated investors right through the SPAC process. So depending on who you choose to partner with, you'll get some benefit there. You might give up a little bit more from a sort of liquidity and control perspective, really just depending on how the negotiation goes. So it's just a matter of, do you want to do it a little bit more at your own pace? And I think that's traditional IPO. Once you start partnering with a SPAC, you lose a little bit of control around timing because it's all about how fast can we go.
Ready to do this?
Ready to do it. Hey.
Please give it up for TK and Jacob.
We are the founders of NGT Academy, and our mission is quite simple. We want to train 1 million cyber warriors by 2030.
I had butterflies in the beginning. They went away and then, I just kind of flowed with it.
So we have programs designed to take people in a matter of months and train them into these high-paying tech jobs.
For me, it's about connection.
We created this program because the rise of costs of getting ahead is getting ridiculous. Who here has either student loans or knows someone that drowned in student loan debt?
Like throughout those questions, really connect and engage with that audience.
We talk to students all the time that join our program that have $80,000, $90,000, $100,000 in debt. The average student loan takes 20 years to pay off. Our value proposition is simple. 4 years of college, $100,000 in debt, or join NGT Academy. 4 months. The best part, it's zero tuition up front. This is how our students pay. Income sharing agreements, 4 years, 10% of their income, or whenever they reach a payment cap of $25K. We win when our students win. 2022, 3.5 million cybersecurity jobs are expected to go unfilled in America. 3.5 million cybersecurity job openings. At $25,000 per student, this creates an $80 billion opportunity. Why do we know this work? Well, we're proud to say we're veterans. We've trained 1,000 IT engineers for the U.S. Air Force. We train about 20% veterans currently. How many veterans out here? Thank you for your service.
Thank you.
Congratulations on what you're doing. You're really filling a vast need in society. Is there any opportunity to get any kind of like government funding?
Another reason why we've moved into the greater Phoenix area is to really serve that veteran community. It's one of the top metropolitan areas that have veterans. That modality of learning with the downtown Phoenix will allow us to, in 2 years, get full GI Bill funding. However, in the meantime, we are looking at our 100% scholarships to serve veterans without having to wait for that GI Bill.
Over the last 5 years, with your students that have taken the courses, what has been the average time for them to have job placement, and what's been the average salary once they are placed?
For the part-time, it's typically around 6 months after graduating, and then the average current salary is about $65,000.
Thank you so much for the
Thank
questions.
you. Thank you, guys.
Look forward to talking to you guys afterward. We'll be around. Thanks, folks.
You talked to a lot of people.
I did,
How has it been out there for you?
Oh, it's been great, you know. I was telling Austin downstairs at the booth, it only takes one investor to create a snowball effect, to build momentum into your fundraiser. So I gave him a little pep talk.
And give him the scrappy talk.
Gave him the scrappy talk. It's like, hey, we went to San Francisco, and it took just one meeting, one $25,000 check, and that led to Joe Montana. That was our biggest first check, $250,000.
We ended up going through the two most successful and popular accelerators in the entire U.S., AngelPad and Y Combinator. There's not that many startups that have gone through both of these, right? So the point is you never know, right?
You never know
where something's going to lead.
Every pitch, every conversation, treat it like you're talking to a billionaire or you're talking to someone that could make a huge impact.
Someone who has a connection that you don't know about.
Oh yeah, that's what I'm excited about. We've raised $18.1 million so far. This is a bigger raise. It's a $36 million raise.
Maybe we'll get some cool partnerships out of this. Who knows, man?
Going public is for entertainment purposes, and at no time do the company, sponsors, nor any participants provide investment advice, endorsement, analysis, or recommendations with respect to securities. On Going Public, you're going to hear from 4 companies that are giving you an opportunity to invest through an exemption from registration with the SEC called Regulation A. These offerings have not gone through a registration process with the SEC and do not have the investor protection that it provides. And it should be noted that just because the show is called Going Public, there is no guarantee that any company will in fact go public or ever list on an exchange like NASDAQ, for example. Bottom line, you need to know the risk going in. And Going Public makes no assurances or guarantees that any potential investor commitment or strategies discussed will result in company's success. Another thing you need to know is that Going Public is operated by Crush Capital, and Crush Capital is being compensated by the companies featured on the show. And some of our mentors have interest in the companies as well. These relationships mean that there could be a conflict of interest between the investors, Crush Capital, the companies featured, and the mentors on the show. We detail all these potential conflicts on the Going Public website at goingpublic.com.